Gary DeWaal here, and this is Bridging the Week for February 23rd to 27th, and today is March 2nd, 2015. Good morning. Last week, the Committee on Payments and Market Infrastructures and the International Organization of Securities Commissions gave good grades to regulators in Europe, Japan, and the United States for their implementation of best practices for key financial market infrastructures, including clearinghouses. The same regulatory organizations also recommended a common template for all clearinghouses so that stakeholders could more fairly compare the entity's risk controls, and systemic importance. Separately, a Bank of England report concluded that high-frequency traders may be good for the marketplace, at least for the equities marketplace in the UK. We have a full plate of articles to discuss this week, so let's get started. Regulators in the European Union, Japan, and the United States have made quote-unquote good progress in implementing the principles of financial market infrastructure, according to a peer review conducted and publicized last week by the Committee on Payments and Market Infrastructures and the International Organization of Securities Commissions. The regulatory organizations found that, generally, regulators have made great progress in implementing the principles related to central clearing counterparties, while their efforts to apply the principles to trade repositories, quote, has been more varied, end of quote. The PFMIs, which the Committee on Payment and Settlement Systems and IOSCO adopted in April 2012, are high-level best practices for key financial market infrastructures that set forth the standards for organization, credit and liquidity risk management, settlement, default management, general business and risk management, and other topics. Both the United States and the European Union were cited as having some minimal flaws in their rollouts of the PFMIs. However, the regulatory organizations concluded that Japan, quote, has completely and consistently adopted the principles, end of quote, effectively giving it the best grade. A Bank of England research report concluded that high-frequency traders had a positive impact on UK equity markets and did not, quote, generally contributed to undue price pressure and price dislocations, end of quote. Although the report concluded that high-frequency traders tend to buy and sell multiple and individual stocks more aggressively than comparable investment banks, quote, trading by HFT firms are associated with a permanent impact, whereas trading by investment banks is associated with only a temporary price impact, end of quote. The author said this is because HFTs are more likely to react to, quote, new information, end of quote, which tends to make market prices, quote, more efficient, end of quote. Aggressive trading by an HFT tends to prompt more aggressive volume in the same direction of the trading by other HFTs in the next few minutes, helping liquidity. Cargill de Mexico and two of its employees were fined $80,000 in aggregate by CME Group for engaging in wash trades on 6 days between June 2013 and January 2014. CME Group alleged that on these days, the two employees, Jesus Avila and Jose Gamboa, traded agricultural products involving opposite positions in the same delivery month when they quote-unquote reasonably should have known that the orders would trade against each other on Globex. Separately, Port 22, LLC, consented to pay a fine of $55,000 for engaging in a pattern of trading between June 8, 2013 and June 11, 2014, whereby the firm did not correct a software bug that caused misleading bids and offers to be sent to the market. According to CME Group, during this time, Port 22's automated trading system entered price modifications in Eurodollar future spread instruments that incrementally widened bids and offers. Port 22, said CME Group, noticed this problem while first testing its ATS, but failed to take adequate steps to remedy it, and then failed to fix the problem for 8 months after it was first notified by the exchange of the issue. A U.S. federal court in Florida declined to dismiss a complaint filed by the Commodity Futures Trading Commission that alleged that Jay Grossman, an attorney, aided and abetted violations of law by multiple clients. The CFTC had filed charges against Mr. Grossman during September 2014, claiming that he helped 4 of his clients, who allegedly held themselves out to the public as metals clearing firms, to engage in unlawful off-exchange retail commodity transactions and fraud. He helped other clients too. According to the CFTC, Mr. Grossman's role went well beyond the provision of legal advice in connection with assistance to his clients. Mr. Grossman had sought to have the CFTC charges dismissed, claiming that, quote, he was merely providing legal advice to his clients and therefore can't be subject to liability, end of quote. The court said that was a fact issue to be decided later. And finally, the Committee on Payments and Market Infrastructures and the International Organization of Security Commissions proposed standardized disclosures by clearinghouses to enable stakeholders to more adequately compare the entity's risk controls, and systemic importance. The disclosure require, among other things, basic quantitative data presented in a common template regarding transaction volumes and values, resources to withstand possible losses, settlement timeliness, and other performance-related statistics. Most information should be updated quarterly or annually. Among specific information recommended to be disclosed are total value of default resources, excluding initial and variation margin, distinguished by pre-funded and committed resources, stress test findings regarding largest aggregate loss in excess of initial margin caused by the default of a single participant and affiliates, and any two participants and affiliates, type of initial margin model used, default rules and principles, and open interest and initial margin concentration metrics for the largest clearing members on an anonymous and aggregate basis. Well, that's it for this week's Bridging the Week. As always, there is more information in the article version and more articles on the article version of Bridging the Week on the website. Check it out. Until next week, this is Gary DeWaal. Have a great week and ciao!